What's up, everybody? It's the Digital World Podcast, and today we're going to go over some of, you know, the banking issues that are currently in existence. And I'm sure you've seen the videos I'm going to show to you, but it's a good reminder of where we're at and why this revolution um, of DeFi is taking place. And at the end, I'll show you some use cases for the Flare network and the Flare Finance, which are it's amazing the things that they're doing. I'll start with this video, and this is a very popular video that's been going around for a while, but it's a good reminder of how these central banks and commercial banks work.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
And there you have it. I mean, in a nutshell, he did a good job of explaining everything in 2 minutes. And the fact of the matter is, yeah, what what they do is just a fraud. I mean, it's unbelievable, but that's the world we're living in. I mean, you have to deal with it. That's what the case is. But being aware of that and knowing how to invest your money and where to allocate it so that you can uh, prosper, you know, and be able to have opportunities that you otherwise wouldn't have. And so that's where we stand on that today. Now, on to other news. I thought this was a very interesting clip that I'll show you.
And won't be able to reduce liquidity to the markets for quite a long while, because we've just come out of the worst pandemic in the last century, and we're 8 million jobs down. If they were to raise rates or the 10-year treasury yields now, they would cause a massive crash in both the crypto, Bitcoin, and stock market, and that would kill consumer confidence, leading to the real economy to crash. And just think about all those boomers sitting on historical high stock prices in their 401k or retirement funds, and people like you and me sitting on crypto paper profits. You're going to nice restaurants now because you think you've got paper profits in your crypto account. Imagine if those markets crashed. We'd all be eating at home. So poor Jerome Powell and the Federal Reserve, they have to keep liquidity in the market, and that will keep on fueling this incredible bubble and bull market. So yes, it's entirely possible that crypto may go down a little bit more, but in a couple of months, I'm sure we'll be onto a huge upswing.
So, and one thing on this channel that I always talk about is, yeah, you may see your portfolio, you may see those digital numbers on there, but at the end of the day, if everything crashes, then what are you left with? That's why if you secure profits and you put it into something tangible, something that you can hold and own, like property, land, or maybe even precious metals, then it's yours. You have that. You're not dependent on a digital number on the screen that could be either taken down from or taken away from you, or just if the market is down, then your entire account goes down. So, but to each their own. You have a plan for yourself, um, but it's important to think about what you're gonna do, because there's gonna come a time where you're gonna have to make a decision, and so that's why I talk about this a lot, to get you thinking about what you want to do, and we're getting to a point where, regardless, the point I want to make is that the on ramp and off ramps of any market has to go through a bank, some sort of bank. And if those on or off ramps are limited, um, or taken away from you, then it doesn't matter how much you have, because you're not able to withdraw or cash out or use that money, especially if it's digital. And this is the point I'm trying to stress, because a lot of people are thinking like, oh yeah, I have all this money, I should be good, this and that, but it's just digital numbers on a screen. And I understand that we live in a society where, yeah, you have to make money in order to survive, and the more you have, the more comfortable you are. But in essence, the fundamental essence of those numbers is, or those dollars on a screen, or banknotes, they're all bank liabilities, okay? Because you can have it in your bank account, but it's basically an IOU from the bank, and that's why it's a banking liability. And that's why if you put it into something tangible, something that you can own, something that you can have and touch, that's yours. And I hope I'm making that point clear. And you can comment below what your thoughts are and what you think is the best way to go about it, or or maybe you have other ways of how you think about it. Let me hear in the comments below. Now, I'll play a little bit of this, but this is just describing the use case for the digital asset XRP.
And then the role of XRP, again, we put the payment platform first, and we sort of put the native currency second. We view the currency XRP as an enabler of the payment system. What does XRP do for the network? It does two things. One, forms a protective barrier, so it prevents DDoS attacks, prevents ledger spam, and keeps the network healthy. But more importantly, I apologize for the transparency of that graphic there, but the other thing it does, it provides sort of a universal medium of exchange. And we'll talk quite a bit about this as we go forward. But the idea that
Universal medium of exchange. So it's going to be the bridge asset to everything. And if you don't think that tokenization of everything is coming, I would think again, because it's coming and it's happening. And the interview with Thinking Crypto and Brad Garlinghouse, he asked him what the next big thing is, and he said NFTs. They're here to stay. But NFTs, yeah, you put everything on a blockchain, you are able to own it, you can track it, you can tokenize it, and that's what's coming. And XRP is going to swallow trillions in market cap, and you'll see it's just a matter of time. Now, I was looking at this, and these are all the use cases we see in the Flare network and Flare Finance. And look, we have Flare X, Flare Wrap, Flare Farm, Flare Mutual, Flare Loans, Flare Mine, and all of these are going to be able to generate income to you at no cost. So you just gotta own the token. So it's awesome to see all this. And if you're not excited about DeFi and what it's gonna bring for passive income, I don't know what else, but it's gonna allow for you to make money just letting it sit there. Hope this episode has brought you some value. Like and subscribe, comment below. What are your thoughts on the current state of affairs with these banks? Are you excited for Flare and what it's bringing to the table? Let me know in the comment section below. This is the Digital World Podcast, and I'll see you in the next episode.